Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is July 18th, 2025. S&P sitting at 6292, which is the highest number ever said on this podcast in this segment, this intro segment. I am joined by Kevin Ferrari today. How are you doing, Kevin?
Not too bad. I said if we're saying higher numbers every week, can't really complain about that.
That's like we were talking about this morning. It's just life is so much easier when markets go up.
Yeah, I mean, it's hard to find anything really to complain about that matters, really, at that point.
Right? And how many weeks ago did we break to all-time highs? It would have been late June. So we've been there we broke above to new all-time highs above kind of that 6150 area Friday, June 27th. So about
next
3
week
weeks.
could be a month.
And here we are. Broke to new highs, right? Definitely not bearish, excuse me. And quite a few areas have been pretty solid. Now, the S&P, even really the last couple weeks, kind of flattish.
Yeah, really from pretty much all of July for the most part.
But a lot of other things around the market have not paused.
Mm-hmm. Yeah, kind of like their growth versus value relative chart. I mean, growth still kind of continues to lead. It's things like tech, communication services, things along that front. Still looking pretty good.
A lot of the software, a lot of these high beta software names. Say a lot of this stuff like that was big in 2021. Some of it stayed pretty strong. A lot of it seems to be coming back. So maybe a little bit of a risk on appetite, especially in those names. We've seen spurts of that over the last few years, but never really got going. So we'll see. But hey, all-time highs. And then you got Bitcoin. Mm-hmm. Right? Last week on the podcast, we were talking about Bitcoin continuing to consolidate, big breakout. I think it got up to like 123,000, 122,000 earlier in the week, sitting right now around 117, 118. So Bitcoin out of its consolidation in the direction that was most likely.
And even Ethereum lately has been kind of pushing higher. Actually, that if you look at Ethereum versus Bitcoin, been outperforming here over the last few months.
And we've got
really strong as of late, the last few weeks. So
and we've got the other Ethereum looks great, especially back up above this like 2,900 level, 3,000 in there. I was sitting at almost 3,600, and then you had
other coins like Tron.
That's exactly what I just pulled up. Tron, Ripple. Maybe a little alt season going on for the crypto lovers. So, I mean, another risk on sign. A lot of aggressive buying out there and some pretty high beta stuff. What were those pictures that people used to buy? The apes.
Oh, yeah.
NFTs.
Yeah, there you go.
Golly,
it feels like
I didn't even think of the acronym.
Feels like it was a decade ago, but it was.
I mean, you never hear about. So I don't know. Maybe if they're buying the Yacht Club apes, I forget the name of them. I know those were the most popular ones, but that would be something. Pretty good week for Russell. S&P consolidating, but Russell broke above its 200-day. I mean, really textbook. Broke, I mean, a couple weeks ago, right? And then kind of came back to retest the 200-day. and now
it's kind of
higher.
smack dab in the middle of that range where it kind of spent quite a bit of time back in like 2020, end of 2020,
Oh gosh,
2021.
Evan, why'd you have to bring that up?
Just saying. So
Yeah,
I mean,
it definitely is
definitely
nightmarish.
right.
Right. I mean, it still has work to do. It has, I mean, I feel like we got head above water, like above 210 on IWM. Like, okay, head is above water, but we still got a ways to get to shore.
Right. But at least it's participating now, which is a plus.
At
right?
least, at least it's above a 200 day. I mean, it's a flat 200 day, but I will take it. We just want to get it moving. Dow has yet to get to new highs either, but whatever.
Right, is what it is.
That's just kind of the turtle that never keeps up. I assume he'll get there, right? I mean, we talked about yesterday in breadth. All these advanced decline lines look pretty solid. They've all gotten to new highs, so I'd assume eventually, in like the Dow, will get there. And the indices that are already there, I would assume that they do hold these highs. We haven't really seen any big divergences in participation. I mean, you even had NYSE advanced decline line looks good. I mean, that's a great looking chart. If as far as you want to look at the broad, super broad stock market, NYSE breaking out, retest of the November 2024 and February highs, and likely high. I mean, we can consolidate here for a bit. I'd be okay with that, but
yeah, it's all constructive. Right? I mean, it definitely doesn't create the feeling, that we're not going to continue moving higher, or at least hold up, right, in the near future here.
What about?
I mean, even utilities today out to all-time highs.
Utilities out to all-time highs, underperforming. Not today; it's not underperforming, but
generally speaking,
the trend is. I mean, it's exactly what. I mean, I wish Russell would do that, to be honest.
Mm-hmm.
What about fixed income? Is the bond market saying we need to be heading for shelter?
No. I mean, we've been talking about risk on, for like equity sectors. I mean, fixed income, kind of the same deal. Like your international bonds still doing really well. You use like iGov or for the most part holding up well on a relative basis and even on an absolute. We were kind of talking a little bit before here too. Convertible bonds have really been rolling here lately, which is good to see. And even just, looking at junk bonds, JNK versus TLT. I mean, that relative chart's at levels that we haven't really seen since 2014.
Wow.
So,
that's crazy.
Doesn't seem to be too risk off to me.
I mean, could you imagine if this JNK versus TLT, right? And so this bottom during COVID, this whole relationship, at least I have it on an adjusted chart, bottomed during COVID at this rate of trend, just to get back to the previous highs. I mean, you could have multiple years of risk on behavior still ahead of you.
Mm-hmm.
Just from this one kind of, I'd say it's a pretty good. I mean, I love fixed income markets for their kind of clues that they give, right? We talk about that all the time on here. We talk about it as a team. I mean, you can have this trend going into the late 20s, early 30s, getting back to where you were before the GFC.
Right.
Wouldn't that be something? Or we just really continue to hate long-term treasuries because rates go higher.
Right.
And rates continue to not break down. I know there's a lot of chatter. It's not really our world on whether there's going to be a rate cut this year. I don't know.
I hate to see Jerome Powell's DMs right now.
Oh my God.
It's got to be a rough one to watch.
Or his email inbox.
Mm-hmm.
He probably gets so many questions. Yeah, not a job I envy. I don't think he's done bad. That's right. That's a pretty lot of people with different opinions on Jerome Powell. I guess any Fed chair, right?
I'll say that's a job where you could. I don't think it really matters which.
Minus yelling, but then I feel like there was you can't be mean to grandma. Mm-hmm. But looking back on it, I don't know. We'll save that. If we ever do a macro podcast or a Fed podcast episode. Maybe we'll talk about that. So we will see. We'll say this: long end of the curve, not really budging, to be honest. Like we're still up near the high end of this range that we've been in for 18, 24 months, about 20 months. I don't know what to tell you, but no clues, no signs there that we're going to be cutting interest rates. So I guess I'm not refinancing.
Yeah, I'm not expecting to do that for a very long time.
Foreign, anything hasn't recovered.
I mean, I think you still have kind of your pockets that are still performing really well. Like, I mean, Greece hasn't slowed down for months.
Yeah, you do have to pick your pocket. It's like playing pool.
Right. Yeah, no slap for sure.
China, though, perking up.
Yeah, that's probably the most interesting one.
I mean, even Chinese healthcare looks good, which is
because healthcare
in general that kind of gets my attention, if we're being honest.
Yeah, because like looking through healthcare ETFs, there really are only two that even pay to look at. One we were kind of talking about earlier too is that psychedelics fund. What is that? PSIL. And then Chinese healthcare. Those are like the only two that really pays to look at.
So, is that what they're getting into over there?
I don't know.
Is that like is that a theme in itself? Psychedelics and Chinese healthcare, hand in hand. The new frontier of healthcare. Chinese LSD.
I mean, even
safe.
Yeah, right. No kidding. I mean, even K-Webs, like Chinese, internet tech. I mean, that's been holding up fairly well. Just large cap Chinese equities in general using FXI looks really good.
Well, even the EMQQ was in discretionary is kind of hit or miss.
Yeah.
The EMQQ out to actually all-time highs today, out of chart, trying to turn it around. So also a little bit of, I think China still gets considered as an emerging market, I feel like.
Mm-hmm. Yeah, because like Asia, so I mean, I guess not China specifically, but, emerging markets, Asia is like 65% of EMQQ. So
yeah, they got like Alibaba and all that in there.
Right. So, I mean, is that risk off if China's starting to finally pick up steam here again?
Maybe. I think I looked that up a few years ago. Like a certain percent of your population has to be. So it's on the MSCI. I think that's who like figures out what's like a frontier market, what's an emerging market, or at least in like the financial services stock categorization world. They kind of are in that, and it's something like a certain percentage of your population has to be middle class or what they deem middle class. I don't think China's like ever really gotten there. I think they do have a big middle class, but as far as nominally,
right?
But like percentage wise, still can't move the needle. But hey, you can invest in it. Doesn't really matter to me if it's emerging or developed,
right?
But definitely something to pay attention to. What about commodities?
Well, I could say that live cattle, feeder cattle, definitely not slowing down. It looks like anytime soon. So beef pretty strong. Hogs kind of up against resistance. I guess what we'll see there.
Hogs up against resistance. Mm-hmm. We got them pinned.
But we'll see. Never know what happens up there. Yeah. Gold just hanging out.
Flat, consolidating. Silver, though, already made a little move. We'll see. That relationship is definitely improved.
Yeah. Yeah, and copper's kind of held up well for the most part.
Yeah.
After
speaking of China, last week. Isn't that like a thing for the macro big brains, like China and copper, and aren't those kind of like linked?
Could be.
That's a correct answer. I wouldn't know, Ian. I just look at the charts.
I know. I have no idea.
It's something I read on X, so it's probably true. Yeah, I mean, I have read it like 19 times on X over the years, maybe even more. So,
and I guess I don't know this either, but like rare earth metals, is that kind of a
China thing?
I don't know.
Or do they just own this MP?
Let's see. So if you look at REMX.
They do have a lot of Chinese holdings.
28.5% Chinese. I'm assuming CN is China.
But if you go to, if we go to Koifin, free advertising for Koifin here, and then we look up their contribution, I wonder if it's all MP.
I mean, that's going to be a big part of it.
Speaking of MP, sure. I think now would be a good time to share with you the support of this podcast. The Adaptive Select ETF listed on the NYSE under ticker ADPV helps investors access two of the most prevalent factors in markets, momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including the possible loss of principal. Distributed by Quasar Distributors, LLC. So thank you, ADPV, for supporting this podcast and supporting Kevin and I's jobs.
Right. And so while you were going through that, I looked up the REMX contributions. So out of the top 10, 5 of them are Chinese companies.
There you go.
And actually the second largest year to date, obviously MP blows all these out of the water, but the next highest one, this is 323 basis points year to date, is China Northern Rare Earths Group.
So you take an FXI sitting near multi-year highs on an absolute basis in a relative uptrend. I mean, this thing is kind of a bronco, but you are getting a bounce off the relative 200-day. So if you were interested in China, I think you'd know pretty quickly if this is going to be a thing. And certainly on a relative basis, it hasn't gotten away. Now we're a CCP propaganda podcast.
They probably just made like a CIA FBI watch list.
Now we just got dinged. They're listening in now.
That's all right.
Oh, we have a group of new listeners from Northern Virginia. Quantica.
More the merrier. Just got to pump those stats up.
Anything else you would like to share with our listeners and clients before we depart for the weekend? Well, we have to work, but
right. No, nothing too crazy. I mean, we always talk about checking boxes, and I mean, there's not really too many boxes really that are unchecked. I mean, even like some of those value sectors that aren't performing well this week are really performing well on a relative basis for the most part, or at least still holding up on an absolute basis. Like Energy XLE, not so hot this week, but essentially sideways for a couple of years. It's not like it's getting sold off really hard. XLB2, kind of similar, maybe a little bit of a wider range than XLE, but holding up for the most part on an absolute basis. I mean, really the one that kind of is probably the most troubling is just healthcare. I mean, that's just kind of in
terrible,
kind of a crazy range. It looks like it's going to be trying to build out here between, 120 and like 140. It could bounce around in there like it did.
Flat out not participating. I don't even think it's like a top 10 holdings thing. Like healthcare sucks.
Not across the board. Yeah, it's pretty rough. I mean, there's a few pockets, like really pharma is not too bad. I mean, I don't know that you could necessarily, say that across the board though either. Like if you look at PJP, let's see if that gets back up above 84. Yeah.
You remember Lilly, how strong that was?
Mm-hmm.
Nothing for basically a year. And it's still one of the better look. I mean,
right. Yeah, and that's thing. Lilly is almost 13% XLV. And
UNH is, looks like, right? Because we talked about that. I don't know if we talked about it on here. We definitely talked about it on Market Call with this. Yeah, so UNH got hit really didn't even try to bounce. Just went sideways. Looks like that downtrend is going to continue unless we can somehow get back above like 300, 295, 300.
Mhm.
It's a bleak, bleak world out there for healthcare.
I think that's kind of probably one of the main reasons that Russell really probably doesn't look
Good point.
better. Because I mean, that's like 15% IWM. And if you look at just year-to-date return contribution, healthcare is the largest contributor to the downside.
Oh, so you're telling me that small cap therapeutic stuff with phase 2 FDA trials are not outperforming?
Doesn't look like it at this point in time.
I'm shocked. I am shocked. But you know what? Why? I guess it's by market cap. Part of me, I mean, I guess Russell, I think Russell does make good indices because it's truly market cap tiered. And I guess that's where a lot of these biotech stuff falls, unfortunately for them. Same with regional banks. But hey, when they're working, it's cool.
Right.
But then you've even had stuff like industrials, where was Dave saying that small cap industrials was small cap industrials versus small caps, right? Versus Russell is new highs. PSCI versus IWM. Yeah. Well, it's getting hit today. But yeah, there's definitely, there's things out there if you want to go look for them in the small cap world. But you had mentioned it earlier in the podcast. It's still very much a growth over value environment. So
Yeah.
probably better ways to spend your time.
For sure.
Trying to find needles in the small cap haystack.
Yeah, but if that's what you're into, man, let it rip.
Yeah, if you're a small cap portfolio manager,
You gotta do what you gotta do.
first off, God bless you. I don't envy you, but I get it. Well, I think that wraps it up for this week, Kevin. Thank you so much for joining me. We hope all of our listeners have a great weekend.
Yep. Have a great weekend.